Seasonal goodwill seems to be in play at the moment, and share markets are moving higher. In the US, we saw good gains across the board. The S&P 500 up by 0.6%, the Nasdaq up a half, and gains across most of the market. Just about every sector finished in the green in trading overnight. The exceptions were the consumer-related stocks. They didn't do as well, but a big lift in tech stocks in particular, a return to those leading Magnificent Seven stocks saw the indices making gains, as we saw here in Australia yesterday, with the ASX 200 up by 0.9%, and futures indicating that we're going to add to those gains in trading today. So very positive outlook at the moment. It does look like the Santa rally has arrived, and if we can hold our nerve, we might see the markets finish higher by the end of the year. Some of the tech names that featured last night included NVIDIA. After last week's announcement, it added a further 1.5% to its recent gains. Norwegian Cruise Lines up 5% in response to that strong news from Carnival in the previous session. And Merck, one of the exceptions in the consumer space, up 3.6%. So as you can see, very broad-based gains in trading last night. However, volumes were very, very light, less than half of recent averages. So although it is a positive outcome and we should see a positive response in Australia today, the lack of volume indicates not a great deal of conviction in these moves. So for the meantime, they're positive. The momentum is upward, but it doesn't have a lot of implications for anything beyond the 31st of December. But the S&P 500 tracking higher. It's on track now for its 8th monthly gain in a row, and a number of strategists calling for it to hit 7,000 this year. That's another 2% and a bit up from where we are at the moment, but not an unreasonable call given how close we are. Silver and gold also hit new highs, and of course the miners in those respective metals are also boosted last night. We do have the US GDP tonight, and if it comes in broadly in line, shouldn't have much of an impact. And the indication that investors are very comfortable at the moment is that the VIX fell again, and it's now very close to 14%, and that's more than a 12-month low for the Fear and Greed Index, and it does suggest there's a fair bit of confidence around at the moment, certainly about the near-term outlook. Turning to Tesla. Now, Tesla, one of the Magnificent Seven stocks, it's been instrumental in those all-time highs for the market. It also hit a new high in trading last night. It's now up 9.5% in a week, with a market cap of 1.3 trillion, and regained its status as the 7th most valuable company in the world. Its year-to-date performance is up 21%. That does reflect the fact that it sold off hard in April and has since bounced back. It recovered all of that and added a further 21%. We did hear that Elon Musk's package from 2018 has been approved. Generally, I would have said that was an inevitable result, but it had to work its way through the courts. There's also talk, and this is only talk, I stress this has not been confirmed, that shareholders in Tesla could get priority in any SpaceX IPO. Now, that is fanciful at the moment, but it could work that way. But it's certainly an indication of the positive sentiment around Tesla at the moment, that sort of talk is getting around. Perhaps one of the more real reasons for the support for Tesla at the moment is the news that it has now registered over 1,600 robotaxis in California. That's 11 times where they were just 4 months ago. And Kathy Wood at ARC has claimed that the Tesla robotaxi business is worth up to $10 trillion. Frankly, I don't know how you come up with numbers like that. There's so much uncertainty about this. It's all guesswork. But it does go to show there is real potential in the robo-taxis for Tesla, and another reason why investors are looking at it, despite the fact that it is at all-time highs. And sticking with the theme as we turn to our watch list today, we're looking at GM, because GM has also hit a 52-week high at $83. It's up 90% from its lows and up more than 100% from the 2022 low. It's had its best share price performance since listing in 2010. It has rolled back its EV commitments on the back of the tax credit being abolished. And most analysts have a flat growth projection and yet still maintain a strong buy, suggesting that there's a valuation argument for investors to be looking at GM right now. Looking locally in Australia, Goodman was up 1.5% yesterday. It struck a deal with a number of pension funds to roll out $14 billion worth of data centres over Europe. And that rollout should keep them very busy in there. That'll take up a lot of their resources. The shares are down 18% year to date, mainly on concerns about the outlook for the domestic property market. This European deal could shift investor focus on Goodman Group. We estimate revenues will be up by 11% in the first half of next year. And those analysts who are making those estimates also have a strong buy rating on Goodman Group with a target of $37, which is up more than 28% from the current share price. And third stock on our watch list today is Mixue, listed in Hong Kong. It is the largest retail food chain in the world with 52,000 stores. Now, most of them are in mainland China, but it does have 9% of its stores in international locations across Asia. But yesterday, it announced it's opening its first store in the US. So it has big expansion plans. The share price is up 66% year to date, but analysts maintain a strong buy rating despite that. And the consensus estimate for its share price is 29% higher than Mixue's current price. So another one to keep an eye on, and especially if they start to bring to fruition their expansion plans in the US, their experience in running large-scale retail business should stand the share price of Mixue in good stead.